we're really excited that we are nigh on production now. We have the mine plan out. The bulk sample is happening. We're planning to turn on the mill near the end of this quarter to process that bulk sample. And then we hope to roll into production sort of in the middle of the year and start producing gold into this gold environment.
Today's guest is a supporting sponsor of Liberty in Finance.
Welcome back to Liberty in Finance. We're delighted to have a returning guest. Gwen Preston is the VP of Communications for West Red Lake Gold. She joins us this Tuesday, January 7th, 2025. Gwen, thanks for coming back on Liberty in Finance.
Thank you so much for having me.
We introduced you and West Red Lake Gold to our audience and our subscribers at the Boca Raton, the Rule Symposium, Natural Resource Investing, almost exactly 6 months ago today. And it was a pleasure for me because when I met West Red Lake Gold, it was through the rapid succession of press releases that were coming out of progress. And I thought something was remarkable about this company. Too good to be true is what I thought, because the spacing between progress notes seemed to be coming faster. It's like if you've driven somewhere many, many times and now you're driving in a much faster car and you're passing the signposts a lot faster than you normally do. Something's changed here. And you and others from the management team there filled us in on why that phenomenon is actually the fact of West Red Lake Gold passing milestone markers faster than normal, because walking into a site that has previously been partly developed but not perhaps managed as optimally as it is now. And we'd love to get, that was 6 months ago, almost to the day, that we introduced West Red Lake Gold to our audience. We'd love to get an update on the progress. And there's some major milestones that were just passed in the past week or two. We'd love to get an update on those as well. If you want to remind us briefly why it is that West Red Lake Gold is able to make such a fast ramp towards production, and remind all of our viewers and subscribers, and then give us the latest updates.
Absolutely. Thanks for the opportunity. Yeah, so for sure, the reason that we are an accelerated path to production story, unusual, which is an unusual thing, is because we bought an unusual asset, a fantastic opportunity. This is the Madsen mine, which is almost right in the middle of Canada, on the western edge of the province of Ontario, in a famous gold district called the Red Lake Gold District. There's been 30 million ounces of gold pulled from high-grade veins in the Red Lake District. 2 million of those ounces came from the Madsen mine, from the 30s to the early 70s. Again, from rock that averaged 9 grams per ton, which is a high grade for a gold deposit. That mine came to the end of its reasonable lifespan in the 70s when gold wasn't worth very much. And then a company tried their hand at restarting the mine between 2014 and 2022. And they did some phenomenal work. They did a lot of drilling. They defined the resource that is still the resource that we're sort of working with today. And they built a really good mill. They permitted everything, and they restarted the mine. They did unfortunately make some mistakes along the way in how they approached knowing exactly where the gold is and how they approached mining the gold. And those mistakes were enough that they ended up going bankrupt after only 14 months of operation, which is what created the opportunity for us. So West Red Lake came in and was able to buy a permitted, built mine sitting on 1.7 million ounces of indicated high-grade gold for a very modest cost. $350 million had been spent, and we bought it for $6.5 million cash plus shares in the company and some deferred payments. And we absolutely needed to spend time addressing the things that had gone wrong with the prior operator, but man, were we ever given a head start at getting to production. So that deal closed 18 months ago now. And since then, we've been running, just doing exactly that, addressing the things that's needed to be done so that Madsen could be restarted successfully. And in the last 2 weeks, the fruits of those labors have produced 2 more really big news releases for us. One of those is that we closed a $35 million debt facility. This is the first significant debt on the project, the only significant real debt on the project. And it's possible to take on debt because we are so close to production. So we will be able to start repaying that debt when we get into production. That's when debt becomes a reasonable opportunity for a company. And so that money makes us very well funded to get the Madsen mine restarted, which we are going to do sort of in the middle part of this year, which is very exciting. And then the other big news that happened just this morning when we put out what's called the pre-feasibility study. Really what it is here's the mine plan. Here's what we're going to do at Madsen. And it lays out how we're going to mine it and what the financial results are of mining it, what it costs and what it produces. And the headline numbers from that are we're going to produce over 67,000 ounces of gold a year for 6 years of full operations, and the average free cash flow in those 6 years of operations is $70 million. Those are Canadian dollar amounts that I'm referencing. So really, the results of this pre-feasibility study underline that it makes sense to restart this mine now. 6 years, I realize, is a somewhat short lifespan for a mine, but the message that I'm really trying to convey here is that it makes sense to start this mine now based on what we've been able to do in just 18 months at the project. And by getting into operation and by getting down into the deposit, developing more, looking around more, and doing more drilling, we really strongly believe that we are going to be able to operate well past 7 years with some further success, drilling into areas, connecting areas, and pulling those into the next iteration of a mine plan. So yeah, the rapid pace continues.
That rapid pace is in contrast to what Rick Rule often talks to us about in terms of the need for investor patience in most general mine operations. He's talked about how that we're in a multi-decade deficit. There's an overhang of underinvestment in exploration and development over the past couple of decades. But now we have, as of last year, new nominal all-time highs in gold price in the US and in most other countries around the world, even prior to that. So this next portion of a decade being especially a promising and fruitful time for producers to be able to be producing. So it sounds like it's a coming together, aligning of the stars of the right opportunity at the right time to really benefit financially from this. And what is it that potential investors, how does that help West Red Lake Gold to have more potential investors taking a serious look at the stock and becoming owners of the stock? How does that help the company?
I mean, the company was put together specifically because we see what you were just describing. We see the gold price continuing to perform over the coming years for lots of reasons that you and I could spend a long time discussing that aren't really the purpose of our conversation today. But we see a strong gold market ahead. And the team that started this company saw that a few years ago and went out looking to build a company that gave investors extra leverage in a rising gold market. So how do you get extra leverage? I mean, the gold price rising from 2,200 to 2,600, that's a nice gain. If you own physical gold, that's a nice gain. But what classically happens when the gold price rises is that companies that are producing gold get a multiple of that increase because, general ballpark speaking, their costs probably remain relatively stable. So the additional gold price primarily goes to profit. I'm obviously generalizing. There's inflation. There's other factors as well. But that's the rationale for why producing gold miners those stocks offer multiples of the increase in the gold price when investors are interested in gold. And to add on to that a little bit, when you go from not producing any gold to producing gold, so you're a new producer, there's an additional re-rate factor that goes on there because, as you would expect, a company that's not producing gold yet gets rated at less leverage to gold than just the gold price. And so the purpose of West Red Lake, the underlying reason that this company exists, is to give investors that re-rate from developer to producer, and then to be able to offer leverage as a producer to the gold price in a rising gold market. That's why we're here. That's our reason. Madsen was a phenomenal first asset to find to start to accomplish that goal, because that accelerated timeline to production means that it's given us the opportunity to deliver that first re-rate within a fairly short time frame. Really unusual in mining, because mining usually takes a really long time to get into production. So we're really excited that we are nigh on production now. We have the mine plan out. The bulk sample is happening. We're planning to turn on the mill near the end of this quarter to process that bulk sample. And then we hope to roll into production sort of in the middle of the year and start producing gold into this gold environment. That we hope, expect will deliver that re-rate from developer to producer. And then we will carry on from there. And carry on from there means turn Madsen into more than this initial mine plan lays out, because with a bit more work, drilling, connecting zones, understanding zones better, and just the practical application of a pretty high gold price, we do think that Madsen is going to be significantly more than this mine plan lays out. There's also some nice peripheral zones and deposits that we're going to pull into the mine plan. So the next stage of West Red Lake, make Madsen more, and look around for what might our next asset be that we bring into the stable, because that's the reason that the company exists, is to give investors increasing leverage in a rising gold market.
I wanted to drill into that. I didn't mean to make a joke there. Drill into that fact that you pointed out about the typical multiplicative leverage that owning high quality gold producing stocks in a rising gold price environment delivers for investors. We've been seeing for at least the last year, perhaps 2 years, a languishing of the share prices of most development and mining companies, other than perhaps some very large flagship, well-known stable producers that Warren Buffett and others have been investing in. But a new kid on the block, such as West Red Lake Gold and others like them, despite the fact that we're in a record gold price environment, et cetera, have been lagging behind the gold price itself in terms of percentage gains. What's your outlook on the macro view of when is it likely that the retail investing or investing public will pick up on getting back into producers so that the investors can enjoy those kind of multiples that you were just talking about a few minutes ago?
Yeah, really pertinent question, obviously. So I think there's two sides to consider. I think there's the gold price side of things, and then there's the why do investors start looking at gold equities as opposed to other opportunities in the stock market. So if we want to look at the gold price side of things, I mean, the gold price is phenomenal. Above $2,600, I have nothing to complain about. And I am bullish on the gold price itself from here. I think that increasingly, almost on a daily basis, I feel like the conversation around debt burdens, money printing, however you want to capture that impact, that reality in the market, in our world, that conversation keeps rising. And I think there's, alongside that, there is increasing acknowledgement that it doesn't matter who is in charge of the administration, who's in charge of the government. It is very difficult at this point to stop that debt train. It is on a runaway track. There are so many commitments in spending, and there's so much debt burden that it is very difficult to constrain spending in a way that has any impact on that debt situation. And I think that conversation keeps coming up. And I think the more and more people have that conversation and start to get aware of the reality of debt, that always brings people to gold. It brings people to other things too. I totally accept that cryptocurrencies are also considered an answer or a way to hedge the risk of that debt situation. But that situation is real. It's rising. People are becoming more and more aware of it. So I think that is the sort of the big picture support for the gold price. And that applies to central banks buying and investment funds buying and individuals buying and all of those things. So that's the gold price side of things. At some point, the gold price gets to a level where producers are just making so much money that gold equities become attractive just on like a cash flow or basis, right? I don't know what point that is. I wish that we were there already. We are to some extent, like you say, some of the best names are performing quite well. But I think that is continuing, and that will happen to some extent as we roll through. On the why do investors look for gold equities, I think that's the bigger struggle, by which I mean usually when gold is rising, it is often because there are risks elsewhere that are making investors want to hedge their equity portfolio. And that is not the situation that we've been in for the last little while, at least not to the extent that most investors are looking to hedge their equity portfolio. And so I don't know how or when that might shift. I think that the gold price rising will bring interest to gold on the whole. I think you're seeing increasing awareness, of gold outperforming, just the gold price on its own outperforming the S&P. And so I think that we will start to get interest in gold because gold equities can also perform in just a strong economy. They can perform alongside a strong economy. It's just a little bit of a harder situation for momentum to build in than when investors turn to gold equities because they are hedging risk in the stock market or something like that. So it isn't ideal from a gold equity perspective because there hasn't been reason. People have been buying the S&P and doing just fine, thank you very much. And that has been just the thing. People haven't been actively looking to hedge their equity portfolio. I don't know how or when that changes, but I think the strong gold price itself is leading us to better places overall.
Well, I'd like to put a distinction on to add a little bit of dimension to the last statement you made, because investors, just as with, say, mining or let's just say resource companies or gold companies aren't all the same. They aren't all the same, and investors aren't all the same. So you've got the biggest investors. Let's use Warren Buffett as an example of that. He's been buying gold producers now for a couple of years, and the average retail investor maybe not yet, because they're not seeing what those who are looking at the internals of the markets are seeing, and that is insiders outselling their shares 6-1 over buying. So you got insiders dumping shares at an almost record pace. We got Berkshire Hathaway raising a cash pile bigger than they've ever raised in the history of the company, anticipating that there's going to be a rollover in valuations and that sort of thing. So we've been talking with numerous equity analysts and money managers and so on who are saying the internals of the stock markets look terrible when you've only got 5 stocks holding up to the entire S&P 500, or you've got insiders selling more than they're buying 6-1, or you've got Berkshire Hathaway raising the largest cash dry powder that they've ever raised in the history of ever. At that end of the food chain for investors, they're making preparatory steps for what the herd followers or the crowd followers are not yet doing, that they're still riding this last wave. So it sounds like perhaps another element that will add together with that sort of that perfect storm that West Red Lake is setting sail in. And this timeline to production, roughly mid-year 2025, what are the main elements that need to come together to make that happen?
Yeah, for sure. So, I mean, you started this conversation referencing our rapid pace of news, and that's going to continue. And over the next quarter, what's going to be really dominant in that news flow are what are called reconciliation results. So the entire thesis of restarting the Madsen mine, of West Red Lake being able to successfully restart the Madsen mine when the prior operators stumbled, is that we suggest that all of the increased drilling that we've done that helps us know where the gold is really accurately, and our more experienced approach to mining that gold means that we are going to be able to pull, tons from the ground at the amount and gold grade that we say. That's the premise. And so what reconciliation results refers to is we're currently doing the very first bit of that. We're taking bulk samples from a couple different spots in the underground mine, and we're stockpiling those on surface. And so, I'm making up numbers right now, but we are going to be able to say, we expect from this stope mining area to be able to pull mineralization that's 6.9 grams, and from this stope that's 9.2 grams, and from this stope that's 7.4 grams. And if we turn on our mill and process those bulk samples, and they come in at 6.7 and 9.2 and 7.4 grams per ton, that validates the thesis. That says that we can do the thing that we said we're going to do, and therefore Madsen can be a success. So that's what's coming up. There's going to be an initial set of reconciliation results where we just pick a few rocks, basically, in a very systematic way, but off of those stockpiles and from the areas that we're mining, to do an early, quick look at whether the grades are coming in line. And then we're going to start up the mill and we're going to process those bulk samples and we're going to get full reconciliation results. So those two sets of results are going to be really important over the first quarter to validate the thesis. And then once we've done that, we're rolling into production mining. We're going to build up a stockpile of ore on surface, and then we're going to start sending ore through the mill. And so over the next 6 and 8 months, we are going to start producing gold. And so it's coming. It's right around the corner. And we are going to be a rare new producing gold mine, especially in terms of a high-grade gold mine, anywhere in the world in 2025.
Now I'm going to ask you to forgive me because my background in manufacturing engineering is in failure modes effects analysis, FMEA, which I thought I invented until I found out that NASA invented it back in the 70s. But anyway, one of the things that you always ask yourself is what are the risk factors that would stand in the way, it would thwart our plans? We have these best laid plans, but what are the material risks that could really provide delays or barriers or costs that wouldn't make that look as rosy? What are those main concerns, and how is West Red Lake Gold working to minimize the likelihood of those risks?
That's a really good question. In fact, in our corporate presentation, we have a slide that is titled "Mining is Risk Mitigation." So you would appreciate that slide, I'm sure. And what I do in that slide is I list a lot of the risks that commonly can upset a new mine startup. So really key risks for new mine startup, examples of where that has happened in the last 10 years, examples of mines where that has happened. And then the third column explains those risks as they pertain to West Red Lake. So some of them don't pertain to the Madsen mine because not every risk is relevant at each mine, depends on the mine type and whatnot. And then for those that are pertinent, what are we doing to address those risks? And so the key risk really at the Madsen mine is the risk that exists for all high-grade, narrow-vein underground gold mines, which is the gold or silver or whatever it is that you're going after exactly where you think it is, first of all? And secondly, can you pull it out economically? And so how do you address those two? Well, that you address the first one by developing a rigorous system to produce an accurate resource model. And so that system for us, we have the benefit of the prior operator having stumbled. And they recognized that they were stumbling and they tried to catch themselves. And they almost did. By the last 2 months of that prior operator's production tenure, they were producing almost the amount of gold that they needed to. It was just a little bit too little too late. But what they did to get to that near success, we've taken that model. How intense does your definition drilling have to be? So how many holes do you have to put into your resource to get an accurate understanding of where the gold is? What sort of requirements do you have to put on the various spots of your resource model before you're willing to engineer how you're going to mine those areas? We've taken their system, we've made it ours, and that is our approach to managing the risk of where the gold is. So that's our approach on that. And then on the mining cost side of things, that's really comes down to efficiency and operational readiness. Mines are really complicated machines, like incredibly complicated machines. If you think of the number of steps that are required that have to happen in order, accurately, and intertwined in order to find an ounce of gold, define it, drill it, engineer it, finance it, mine it, move it, have the personnel, have the equipment, all of it just for 1 ounce of gold, it is very complicated. And so the way to manage that complexity, which is really the way to manage the cost of mining, those are the same things, is to understand how complicated the machine is and to have as many parts of that machine operating efficiently before you start trying to do it as possible. And again, that's where our setup is actually a benefit to us. We have been underground operating for 16 months already. And by operating, I mean blasting tunnels, drilling, creating new access to the ore. We know how much it costs to blast and move a ton of ore at the Madsen mine. We're not estimating it, we're doing it. And so that on the ground experience has our costs very real. It has our teams practicing what they're going to do before we're actually doing it. It means that we're staffed up. Like we expect to need 220 people on average at site during operations. We already have 140 people. We've already trained them. We've already got them going. So real operational readiness and understanding the complexity of the machine, I think, are the way that we are addressing the cost side of things. So that's what we're doing. Mining is risk mitigation.
You ended up right where I hoped you would, and that's on the people. You told us when we first met you that you were, in addition to taking over a promising resource, you also inherited some skilled and excellent workers who also had good perspectives and wisdom about the region, about techniques and that sort of thing, and who were eager for a management team that could complement their experience and make this successful. So could you just briefly touch on the workers themselves and then the management team, and why potential investors should have confidence in both of those here?
I mean, yeah, both of those sides are really important. And I'm glad you referenced the people who came to us attached to the Madsen mine, because the previous stumble, from where we stand, we see, and from everything that we've heard from the people who worked there, it was largely a top-down challenge. It was from the management side of things. The people on site weren't given the opportunity to succeed, but there was a lot of effort put in. There was a lot of knowledge established, and we have the benefit of that. And so, I mean, I'll take our chief geologist, Jill Chrisman, as an example. I mean, Jill, Shane, the president and CEO, we joke regularly, but not really joke, that Jill is the most important person at West Red Lake Gold. She has been with the project for 5 years. She knows the geology inside and out. She knows exactly, her understanding of this mineral system, what is needed to mine it, to find it accurately, and therefore be able to give the operations team the ability to mine it accurately. It's just unparalleled. You can't pay for that kind of knowledge. So, and she's one really good example, but there's lots of people who came to us attached to the project who brought that kind of that kind of wealth of knowledge and experience with them. And then, of course, we've brought new people in who are supplementing that, who are complementing that. And Shane Williams gets a lot of credit as the leader of this company for having understood the need to build a strong team, and he's done a phenomenal job at it. And we're about to announce another person who we're adding to the mine site team, who we're really happy to have attracted. And good people attract good people, and I think that that's part of what's really happened here, starting with Shane and those people at the Madsen site. That marriage has really brought a lot of good people to West Red Lake. So that's what's making it possible for us to have confidence that we're going to be able to restart this mine successfully and soon.
Well, I always ask companies who we have introduced to our viewers and our subscribers how we can find out more about them. We'll certainly put a link to some information about West Red Lake Gold in the description of this video to help make it easier. But your advice as the VP of communication for West Red Lake Gold, for people who want to find out more, what should they do and where should they go?
Absolutely. So westredlakegold.com is our website. That is certainly the portal to all. And so we have our investor presentation there. We have information on the project there. We have ways of contacting us there. So that is certainly the place to start. If you happen to be watching this immediately, we are also hosting a webinar about our pre-feasibility study very soon. So maybe we can also include the link to that webinar in the information below. So if you're interested in the nitty-gritty of what this mine plan is going to look like, that webinar is happening tomorrow, which is Wednesday, January 8th. Then that webinar will also be hosted again at westredlakegold.com, so anybody can so you can all watch a replay of that webinar where we dive into all the details of the mine plan. So yes, please, our website is the center to everything, and I am also always happy to answer questions from anybody who has them.
Well, Gwen, it's a pleasure to have you. First of all, because of the story that you have to tell for West Red Lake Gold, but secondly, because you spent so much time in this industry prior to getting connected with West Red Lake Gold, that you bring a balanced experience perspective on how to know how to ask the questions that are important to ask on behalf of the potential investors. So we are grateful for your presence here with us and with our audience, and we hope to have you back. It's kind of fun. It's like being in the, I don't know how to make an analogy, but I like that fast car analogy. We're passing a lot of signposts, and it's exciting times for those who are getting on board for the ride. And it looks like good things ahead. And 2025 is already looking like it's going to be an exciting year from several standpoints, and this is certainly one of them. And we're just grateful for you being here once again with us on Liberty and Finance. If you had any final thoughts, we're eager for them. Otherwise, we'll look forward to our next visit.
I mean, I think that this has been a great conversation, and there's so much going on that there's always more to discuss. But let's certainly touch base again in a little while, and see how much news we've been able to throw at you between now and then.